Hey everybody, this is Jose here. We are 30 seconds away from starting the session today. This is a sound check. Please go ahead and confirm with a quick message on the chat box that you hear my voice. That would be appreciated. That way I know it's all good to get started with the session today. Wonderful. Thank you so much, guys, for the confirmation. So we got 8 more seconds to go and we begin. Here we go. We just reached the top of the hour. So the session is now officially on. So we're gonna introduce the session properly. Here we go. This is me. Hello. How are you, my friends? Good to see you all. Thank you for joining me today. My name is Jose Blasco. Today is April 30, 2020, last day of April, about to change the month. Crazy month, by the way, isn't it? And today we are getting together for longer term trading purposes. So looking at the world of options, especially directional and non-directional trades. Non-directional trades are difficult to find in these days unless you focus on very short-term duration with options on futures or things like that. With the equities is a bit more difficult, but we'll give it a try. And if not, we'll certainly be playing the directional side, long and short, looking for market opportunities. Before we start, we have a disclaimer, so I will read this quickly so we can begin. So disclaimers, the following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through a demonstration do not indicate in any way the results you may receive on using our products. And this is the introduction. Therefore, the session is now officially introduced and we are ready to begin our trading utilizing all the tools available. And I'm going to start looking at the scanner of TradeStation, looking for a specific type of opportunities, which I'm going to describe right now. Quick look at the chat box first. Ahmed, how are you? Gali, how are you? Paul, good to see you as well. Charles, Gary, nice to have you with us, Gary. I believe it's the first time. Bosco, how are you, everybody? Very nice. Thank you, everybody. So again, let's get organized here. So I am pointing at the TradeStation scanner, as you can see. We've seen this before if you've been in prior sessions. I mean, our approach to trading is mechanical, so it's always the same if you wish. So on the top, we got directional opportunities, okay? On the bottom part, we got what we could call non-directional, to be a bit more precise, credit opportunities versus debit opportunities, okay? And the reason is because the debit are pretty clear. It's either you're long or short, okay? You make money. The market has to move for you to make money because it's debit, okay? With the credit ones, well, now it's a different story, okay? You may have the market only to move in one direction or flat. That's what we call neutral, either neutral long or neutral short. But we also have the pure non-directional opportunities, okay, which are the ones where we bet the market is going to stay flat, trading within a range, and basically selling options and waiting for time to pass and making money by having a market not to move too much, okay, which is a different approach to standard trading. Okay, so I'm gonna run a new scan on the non-directional because the only result I got is IEF, which is an ETF. We normally don't run non-directional trades on ETFs, so I'm just gonna click run to see if other opportunities appear. I don't think so, to be honest. Okay, in the neutral side, we have JLD and IEF, and in the neutral short, none. So it's going to be difficult to have a pure non-directional trade. So we'll take a look, okay? And the reason why is because the reason why it's difficult to find proper non-directional trades, you can certainly come up with one, that's for sure. But when I mean by proper is meaning an opportunity that meets our rules. The reason why it's difficult is because, look, if you look at the market, so I'm going to look at the S&P. Okay, markets change, markets move, and therefore there are times where we are more in the directional side. There are times where we are more in the non-directional side. So markets change, and our job as traders is to be adaptable, isn't it? So I'm loading the S&P, and the first thing that you probably realize with the S&P is that what a move up, okay, since the end of March, okay. So very, very strong move up, preceded by an absolutely crazy nuts move down, as we all know, isn't it? So, in other words, there is a lot of volatility in the market in both directions. Okay, and when that's the case, obviously it's more complicated, it's more difficult to find markets that are trading in a range or ready to trade in a range. And when that's the case, the scanner will return less results. But what's the other thing? Well, the other thing is the VIX. Okay, so let me load the VIX. So the VIX, it's currently trading at, come on VIX, come see us. By the way, while the chart is loading, which is taking a little bit of time because I'm running the scanner at the same time, isn't it? Here's the VIX. So the VIX is currently trading at 34. Okay. So in other words, if you look at it in a long-term perspective, okay, 34 is quite high, to be honest. Okay. So if I look at a monthly time frame of the VIX, okay, so if you think about where was the VIX during a long, long, long time, for years and years and years, the VIX doesn't surpass 30. Okay, only when crazy things happen, right? You got peaks. Okay, and when it's really crazy, well, like 2008, it goes to 90, and in this COVID-19 crisis, we've reached levels of 80 plus. So, in other words, those are very rare situations that only happen, maybe once or twice in a decade. Okay, so they are statistically unlikely situations where what's inside the box is very likely, is what happens most of the time. And notice that being above 30, it's certainly a high number. Okay, if you think about it, it's certainly a high number. Okay, now having said that. That number is relatively high if you look at what happened throughout the years, but it's currently relatively low given the volatility available in the market. Okay, and what the scanner is doing really is looking at markets that are trading in a range, which there are not too many. But also the other thing the scanner is doing is looking for options that are overpriced in the top 50 tier. And guess what? Because the VIX has been going down, 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 as you can see, so many of the options have lost a lot of the value. And this, together with the fact that few markets are trading in a sideways kind of consolidation type of market behavior, so then the scanner was only reporting IEF as a valid candidate. Okay, that's why. Now, if you were to look at directional opportunities, okay, now the list is going to be long. To the short side less. Okay, why? Because the S&P is in an up market, is an up climate, so therefore the list for short opportunities is going to be less. But both long and short, we do have a decent list. Where again, with non-directional, okay, we're going to see the final list in just a little bit. Okay, we filter down from close to 9,000 to 117 stocks now, and then the next pass is going to be 50, and then we'll see if in the end we do have a match or we don't. But I would say it's quite unlikely, and the reason why is because what I just described as the current market situation, the current market environment that we have in front of us. This changes, by the way. 2 weeks from now, I could be saying the complete opposite. Options may be high priced again, the markets may be quieter. You never know. Okay, and our job as traders is to be adaptable and to trade what's possible instead of approach the markets, let's say, based on our preferences, or, if you don't mind me to use a strong word, a little bit of stubbornness about what you would like to see that is not there, okay, and still trade it like if it was there. And then you get in trouble if you do that. Is that making sense? So the scanners are doing a good job for us at saving us time, but also at forcing us to only look at the markets that meet certain criteria instead of look at random markets and, whatever looks like what you would like it to be, you trade it. Okay, so we don't want to fall into this sort of a trap, which is very human. Okay, but we should not be there. Okay, so let me see. We got Royce. How are you, Royce? Gary, Diane, thank you so much for that beautiful message. Magic, yes, absolutely. So yes. Well, actually, normally when I say magic, I would say magic. I think I'll say it 3 times, I believe. I'm not sure, but probably yes. So anyway, so let's see if the scanner loads. Okay. In the meantime, I'll start sorting my stocks. Okay. So what I would normally do is sort the list from higher price on the top to cheaper price in the bottom. Okay, same for the stocks that I plan to go long and short. Okay, so now I got my stocks shorted both in both directional scanners. Okay, and let's take a look at this filter if it's gonna finish soon, which I would say probably yes. So I would like to either leave that door open or just close the door, which I believe I'm gonna close the door, but I would like to see if that is the case for non-directional trades. So Mr. TradeStation, please go ahead, complete this scanning process for us. And that way I can move into the different type of opportunities. Okay, because again, I'm just waiting patiently here because if we do have opportunities for non-directional, it's going to be one or two maximum, I would say. And therefore, I would like to look at those trades if available and complete that. And if it's not available, then forget about it. Okay. And no need to come back later to non-directional trades because again, given the market conditions, it's going to be tough. Okay. So we are almost there. Okay. The list is about to be completed, as you can see. Yeah. And in the end, we came back with the same result that was IEF. IEF is an ETF. ETFs normally always carry less premium available. And when less premium is available, so the problem is that normally we end up in situations where we plan the trade and we conclude we don't have premium enough to take the trade. Okay, we have parameters that determine the risk and the reward of our trades, isn't it? And if the premiums are low, then it's not going to work. So forget about it. No non-directional trades today. Okay, so we're gonna do directional trades. Okay, and by the way, we have one directional trade running. So I would like to start the day with looking at that trade. Some of you may be in that trade, so we can look at it. Okay, here we go. So Option Session Pro is loading. Almost there. Very nice. Nice, everybody. Cool. Okay, so now looking at the Manage tab here, okay, so we have a trade running on Adobe, okay. This is a trade where we purchased the 340 and we sold the 385 call. So this is a vertical spread, okay. And I would like to look at the chart of Adobe, okay, to see what's going on. In case some of you are in this trade, if any one of you is in this trade, just let me know, guys. I would like to know. Okay, I would like to know. And by the way, we should be out of this trade. I don't remember by heart what target I did say we would use, okay? But certainly we said above 350, okay? And we are way above 350. So that means that we have reached the target. So this is a trade to be closed and profits are to be collected, okay? In parallel, on my other computer screen, I was loading TradingView as well. Okay, so we can check on earning dates. Okay, so I'm not fully sure why TradingView is looking like that. Okay, now got it. So notice how the earnings report for Adobe is happening on 11 of June. So based on earnings, there is no rush to close the trade at all. But based on the plan of the trade that we set up, okay, I don't remember exactly. I didn't make a note. I don't remember exactly what the target was, but certainly based on the note I have on the screen, which is the 350 call. We were happy to sell the 350. We ended up selling a higher call, the 385, to get the deltas that we wanted. But given the fact that I started with that note on the chart, it means that our target was going to be right below 350. Okay, and this, to be honest, was reached 1 or 2 days ago. So this trade should be closed since 1 or 2 days ago. It's more or less the same price point that we had 2 days ago. So the P&L would be similar to that. Okay, and if you guys were in this trade, basically this trade is a trade that produced 200 over dollars of profit, okay, and you will want to close it now. Okay, so the best way to close this trade would be to put those two units together, long and short, on top of each other. Okay, so now instead of a call, it shows as a vertical. Okay, it shows as a vertical. So now what I could do, okay, I could do is to take this vertical here, okay, which now is seen as by TradeStation like is one thing, even though it's made of two calls. And now I can come here and basically select close this position. Okay, close this position, and you have a little bit of a spread there between 1890 to 1973. That's a midpoint. So again, I'm using a paper money account, a simulated account in the sessions. Okay, so in order for me to guarantee the fill, I'm just gonna go for a market price. Okay, but certainly if you are using this in a real account, I would go for 1973. I would round it up to 1975. Normally multiples of 5 or multiples of 10 would normally benefit from easier fills. Okay, so I would call it either 9070 or 9075, and you should get filled relatively easily in this trade. In my case, I'm gonna go market, so I'm gonna get a little less premium for that. And as I close the trade, place order, yes, 1 2 3, I'm gonna be out of the trade, and we're gonna be able to see that's it, I am filled. So we're gonna be able to see that this trade has been closed for a full profit, and including commissions, the profit has been $143 per contract in this particular case. Okay, so the trade is over here with ADBE. Okay, good. Okay, no comments on the chat box, so I believe everybody's fine. So let's begin our trading time. And since we just came up with a trade on ADBE, and also, okay, I'm looking at the S&P. Okay, so what do we have on the S&P? Okay, we have 6 candles going up out of 11. Okay, so the S&P could certainly continue moving higher, maybe come down, hit the UFO, keep going higher, get to the red UFO, come back down, maybe there's another UFO, keep going higher like that. And this could be another 5 days based on probabilities from 6 to 11. That's another 5 days. So certainly when managing a portfolio, I always say the same. It's critical. That's why I always repeat myself. When managing a portfolio, you should not have only one stock, or only have stocks that are long, or only have stocks that are short. You should have a diversified portfolio, and the best way to do it is to rely heavily on gamma, have a positive gamma for all those directional positions, okay? And then play with the deltas, where some positions produce positive delta, some of positions produce negative delta, and all of these has to do with the auto climate applied to the S&P. So you basically make your portfolio to be exposed to the statistical direction of the market, while you have an edge, or I should say you have a hedge based on having negative delta positions against positive delta positions, or vice versa, in case the market was to turn abruptly and move in the opposite direction. Okay, so today I'm going to start looking at short opportunities. Okay, because I am guessing that most of you, after multiple days of the markets going higher, probably most of you already have multiple positions that are long. So I'm going to be looking for short positions to be entered as a hedge. Okay, which doesn't mean that all of you will need it. Okay, but if you do need it, you will want to execute those trades. Okay, and then when I'm done with finding a short, then I will move into finding a long. Okay, and by the way, here we got Tiffany's in the top of the list, but notice that after the market open, Tiffany's moved a little bit and created a thin dot instead of a thick dot, and therefore the climate that was identified as valid by the scanner has been invalidated by the price action intraday. So Tiffany's will be discarded because the climate is not confirmed. Therefore, I am moving into Philip Morris. Okay, and we have a similar situation as well, where Philip Morris was looking at this trade as a valid trade to short. But it's not the case any longer. Okay, so I'm guessing that price coming back up very aggressively is the reason for that. So what about Oracle? What about Oracle? What do we have? Okay, so I'm having a little issue here. It's looking like my scanner has not updated or something like that. I did run it before the session started, but I'm going to have to run it again, because it's okay for me to have a blue dot once, maybe twice, but 3 times. This is telling me that for whatever reason the scan I run didn't save properly. I have done a reset on my TradeStation, so maybe that's the case. So I'm gonna have to rerun the scanner here. Okay, so I'll start with the directional long. Okay, well, you know what? We just closed a trade on Adobe. Okay, but Adobe is on the top of the list. So let's take a look at Adobe one more time to see if this is gonna be a good one or not. Okay, so Adobe, it's actually looking very good from a climate point of view since we got one blue dot. It's number one out of 7. So this is the beginning of a potential climate that could stretch nicely. Okay, that could stretch nicely. Okay, so while we have a proper climate, we do have an EMA located at 341, and while we are realizing that 341 happens to be located somewhere within that UFO with a probability, okay, with a UFO performance stat of 52%, which is above 50, and therefore is looking very good for us to plan a trade on Adobe. We just closed one for a profit, and we are gonna plan another one, expecting Adobe to hopefully come back down. And if Adobe comes to this UFO, we would re-enter a trade to the long side, expecting a 7-day move up based on the climate. Okay. So with all of this said, I also want to check the pre and post market session to see probabilities are below 50. So then I'm going to discard this particular type of data and focus exclusively on the regular session data, which again is beautiful, like it was the other day on Adobe, is giving us another opportunity that looks good. Also, if you remember what I said before, I'm speaking out of memory. I think it was 11th of June. Yes, 11th of June was the earnings report on Adobe. So we are giving ourselves basically like a month and a half, more or less, a little less than a month and a half to get to where the next target is. Okay, so let's talk about that. Where is the next target? Okay, so I'm gonna activate AutoUFOs to the daily time frame of Adobe and see where that next target would be, which, as you can see, the next target would be located at that red UFO. So let me click and hold to find the values, okay? And the target would be 368.75. That would be the target for Adobe, right? So 368.75. That would be the target for Adobe. Okay, cool. So easy trade. It's looking quite simple. So let's go for it. Okay, let's go for it. I am going to load Adobe on the option chain. And by the way, everybody, please give me a quick message on the chat box just to say all is good, or if it's not, if you have a question, go ahead and type your questions. But even if you don't have a question and all is good, please type all is good. Okay, so that way I know you guys are following and everybody is okay, no one is lost. Give me a little bit of feedback. It's really, really appreciated. Okay, so okay, so this is not ideal. I just got an error message on Option Station Pro. Hopefully it will allow us to plan the trade. Okay, it seems to be still operational, so I'm gonna give it a try, and if not, I will have to reset TradeStation. Okay, so we have a target 368.75. This would be the target for Adobe. Okay, the entry is not gonna be 336. This is the entry we got before. The entry we're gonna use in this case is gonna be the top of this UFO, and the top of this UFO is 344.16. Okay, so 344.16 would be the value for the entry. Okay, so 344.16. 344.16. Okay, so entry and target 344.368. Okay, so with those numbers in mind, we have a few things to be done here. Okay, we're gonna have to add a spread here and calculate the spread and everything else. Okay, which I'm gonna do that in a minute. But first, I need to pick the right expiration date for the trade. How do we do that? Well, to pick the right expiration date, I need to calculate my time to target. How do I do that? Well, I'm going to look at my 368.75, which is my target, calculate the difference to the 344.16, which is my entry. Okay, that's $24. Okay, and here on the bottom left, you can see the daily ATR is daily ATR because it's applied to the daily time frame. Okay, so the ATR it's applied to the daily time frame. So this is 12.27. So if I take 24 divided by 12.27, so this suggests that it's going to take 2 weeks to get to the target. But sorry, not 2 weeks. It's going to take 2 days. Okay, if the market was to move like straight line to the target, it would be 2 days. But again, we always give ourselves 7 day per daily ATR. We give ourselves 1 week per ATR. So that is a 14-day trade. Now, 14 days, if you look at the option chain, would imply that using May 15 is good enough. Okay, but we have another rule that says that we want to use options that expire in a way where we are lining up with the earnings date, which is 11th of June. So I will want to use this one. I am very concerned using the weekly expiration date on Adobe for liquidity purposes. And you can see the 350, you got 16 to 21. Okay. So you got like $5, okay, of spread. You would lose $500 just to get in and out of this trade, which is not reasonable. The monthly 19th of June should be much better. So 2020 to 2090. So you lose $70 to go in and out instead of losing $500 to go in and out. Certainly, this is going to be the expiration date to be used, okay, based on our rules. So I'm gonna do two things here: analyze and buy a vertical first. 1, 2, 3, done. Okay, that's gonna bring a vertical spread here. But also, before I get planning, I'm gonna come back and right-click, analyze and buy a single call as well. Okay, we always need to compare single call with vertical spreads. With high price point stocks, typically spreads would work better. But also, as you can see with Adobe, and we saw that the other day, by the way, we got $5 strike price increments, okay? And sometimes it's difficult to adjust the spreads like that. So you never know what's going to be better, the spread or the single option. So instead of guessing, what I'm just going to do is very simple. I'm just going to plan both, analyze both, and decide on which one is best after I do the analysis, okay? So I'm going to start with the spread. Therefore, I am unchecking, okay? I am unchecking the single, and I leave checked the vertical, okay? So forget about the single, even though it's there, it's doing nothing because it's unchecked. Okay, and now I'm gonna have to, using June 19 expiration, which we already said, I'm gonna have to work on the strikes to adjust this trade and meet my delta and gamma parameters up here. Okay, but first I need to go back to the chart. Okay, let me do this in a proper way. Here we go. So I need to go back to the chart. So I decide on the specific options to be utilized in this spread. So to make it visual for you all, I'm just gonna have to do some writing here, okay, which is that we will probably want to sell the 370 call. Okay, why do we want to sell the 370 call? Well, because the rule is to sell calls, okay, beyond the target, okay, which the target is 368.75. So I think you are with me that 370 is beyond the target, right? And then, okay, and then we want to buy calls, okay, that are between entry and target, okay, knowing that entry is 344.16, okay, which is the green UFO that we have right there, okay? So in other words, which call am I gonna buy? Okay, well, it's looking like, okay, a good starting point, okay, could be to look at what happens if I buy the 345 calls, okay, and I sell the 370 calls at the same time. Okay, and let me do this, by the way, so it may be a bit more visual if I put it like this. Okay, so you are basically buying the 370 and, sorry, buying the 345 and selling the 370. Okay, if I bring it something like that, maybe it's now more visual for you. So I'm kind of lining up the 370 with the 370 and the 345 is more or less there, something like that. Okay, so buy the 345, sell the 370. That would be the way to approach it in this initial part of the plan. So let's input those values, 370 and 345. Okay, and when we do that, let's see what happens. Okay, so if I do that, okay, I get a delta of 19 at entry. Okay, so if Adobe falls to 344 and therefore it's time to buy the spread, at that moment in time, your delta would be 20. Okay, and that's not good because we have a rule that says we want deltas to be at least 30. Okay, at least 30. So how are we going to fix that? Okay, how are we going to fix it? Well, one way to fix it is to move the 370 to be above 375. Now delta is 23. What if I move to 380? Now delta is 27. What if I move up to 385? Now my delta is 30. Okay, so I'm happy with that. Okay, I also have a positive gamma. I'm happy with that. Now when I get to my target, my gamma becomes slightly negative. Okay, it becomes slightly negative. So let's try to fix it. If I move this to 390, okay, it doesn't really impact the gamma. It's making my delta more. So what if I move the 345 to 350? Okay, so if I move the 345 to 350, I am still with a 30 delta, and my gammas are also positive at the entry, slightly negative at the target. Doesn't change much, isn't it? So let me try the 395 to see what happens. Okay, and it's about the same. So guys, it's not gonna be a major difference. So I'm just gonna come back to what I had, which is 345, 385. Okay, this is the best it can get for the spread, 30 and positive and slightly negative. I would say it's good enough. Okay, so that's what we have. So that's option number one, which is doing this spread where you would expect the cost of the spread at entry to be around $1,500. That would be the amount of money needed to enter the trade. Also, the risk associated with this trade, because the idea is to not to use stops. Okay, so the idea is wait for price to come down, 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 and when it comes to the green UFO, then you buy the spread. Okay, buying the spread means to sell the 385 and buy the 345. This is what you would do. Okay, you don't do it now. Okay, you don't do it at the current price right here. Okay, you don't do it at the current price right here. You will wait for Adobe to fall into the UFO and then you buy the spread. Okay, and well, you expect it to go up, but what could happen is that it goes down, gets to the next UFO, and now it goes to the target. This could happen too. Okay, this could certainly happen. Okay, so if you were to use a stop below those UFOs, at that moment in time you're out and you just taken this loss. Okay, where if you don't use stops, now you are giving other UFOs the chance to make it work for you. The price to pay is that you need to be willing to risk $1,500 for the trade, which is the most you can lose. Okay, so if that's too much, don't take the trade. If that's okay, then you know that's your risk. Let's say you tell me I want to risk 3,000. Okay, so buy 2 spreads, okay, or 3, right? If you want more, so you would adjust your the amount of units in the trade given your risk appetite in this case. Okay, but certainly this trade is valid. Is a little over 1,500, as you can see. Okay, and now the next question is, okay, but what is better, to do the spread or to do a single option? Well, if I do the 355, okay, notice how my delta is 44. So if I want to start with the same exposure for delta, if I do 365, 370, okay, if I do 375, okay, let's call it 370. So if I do 370, okay, good news, I got my 30 deltas, and very good news, I got positive gamma all the time. That's great. Okay, it's also good to see that the price is under $1,000. All of this is good to see, but what is not good to see at all is that the 370 call, it's not between the entry and the target. The 370 call would be beyond the target, and that one, the rule is not beyond, the rule is between. Okay, so in other words, we would break a rule if we do this trade, and therefore we cannot do this trade using the single call. We would then use the spread instead. Okay, cool. So let's place the order. Okay, and from there we continue. So I'm gonna click trade. I'll make this a day. Okay, so if it's not filled during the day, we can reassess tomorrow. I'm gonna make this market just to keep it simple, and then activation rule would be based on the price of Adobe. Okay, based on the price of Adobe, if we drop to 344.16, okay, so less than or equal to 344.16, then activate. Okay, notice it's called activation rule. Okay, so if Adobe drops to 344.16 or below, activate this order, and this order, my friends, is to buy the 345 and sell the 385 using 19th of June expiration date. Okay, the order, and here's the activation rule. So everything looks good to me. So I'm just gonna click yes. So 1, 2, and 3, and the order has been sent. If we look at the manage tab, we have a received order. Okay, field is the one we closed earlier. Funnily, it was Adobe as well. Okay, this is a new one with Adobe. This one has not been filled. This one is a de order waiting to get filled based on the condition that we described before. Okay, so trade number one, Adobe, the order is in. Let's see what happens. And in the meantime, I want to check. Oh, it's still running. Wow. Okay, well, almost ready. Let's see the opportunities that the scanner has have found for us to look for shorting opportunities. Okay, and it's 3. Okay, so we're gonna now move into the world of shorting, and we're gonna start with Procter and Gamble and see what happens there. I'll take a sip if that's okay, guys. Okay, so Procter and Gamble. Okay, well, we're gonna pass. Okay, why are we gonna pass? Well, because look at the climate. Okay, the climate is certainly confirmed and nice, but statistics suggest, maybe I should zoom in, that would be way better for you guys. So the climate suggests that for down market, it's gonna last for 3 days, and this down market in Procter and Gamble has been moving down already for 4 days. So could it be more than that? Of course, it could be anything. But what's the reality? The reality is that it's not supposed to be or not likely to be based on probabilities. And trading to the short side now would carry lower odds. The rule we have as well is that we take this number, which is 3, okay, because we round up to 3, okay? So 3 days in this case, okay? And optionally, okay, you can add 50% extra, okay, which is 1.5. So in other words, if you were to expect this climate to propagate for 4.5 days, it would not be a crazy thing. But after 3 days, you will want to take this trade with half of the position size. Okay. But the fact is that today is already day 4, and we've been trading since 9:30 in the morning, New York time, a few hours already. So we are kind of reaching 4.5 days already. So again, hopefully we'll find better trades. Procter and Gamble doesn't look like a good opportunities for shorting. Probably is going to come back up, define an up climate again in no time based on the stats we have in front of us. Okay, so we're going to move into AMD and see if AMD is giving us an opportunity or not. And AMD is indeed giving us, at least based on the climate, a very nice one. So we'll see everything else later in a minute. Okay, but certainly based on the climate, we got a thick dot, so that's confirmed. Is dot number 1 out of what statistics suggest is going to be a 4-day move to the downside. Okay, the average price is 54.53. So we'd like to find UFOs around that price. That one is too high. 55 is too high. We're looking more at 54s. Okay, so let's take a look at what's available on the chart right now. So probabilities are good. Okay, using regular trading hours data, 52% is certainly above 50. Unfortunately, that UFO is not lining up with the EMA, so it doesn't work. So my last change here would be to look at pre and post market to see if using pre and post market, we do have a UFO in the right location. And unfortunately, we don't. So we still have very good probabilities, okay? But the bottom part of that UFO, as you can see, it's 55.33, okay, which is almost $1 higher than 54.53. So yeah, unfortunately, it's not good. Good climate, good everything, but not good for us to take it as of now. Okay, so we're gonna look at KR, and this will be the last opportunity that we may be able to execute to the short side. Okay, so looking at the climate first. Okay, here we go. Looking at the climate first. So what do we have? We have a confirmed climate with the thick and red dot. That's very good to see. We got 2 days into the climate, and climate statistically could be of 5 days. Okay, so that's good. All of this is looking good. Average price is about 32, and we are more or less close to 32, 31.89. So if we were to have a UFO close by, then I would say we have a trade. 54% is looking very, very good. So let's take a look at what's the bottom portion of that UFO, which is 3276. 3276, unfortunately, is pretty much higher than 32.19, and therefore that UFO, just like what happened with Procter and Gamble, that UFO, sorry, with AMD, that UFO is not lining up the EMA. Okay, but I still have one possibility, crossing fingers, regular session. Regular session is giving me 53%, okay, which is good. And we have a UFO located at 32 point something, where the something is 32.25, which lines up very nicely with 32.19, because remember, it doesn't need to line up exactly in this case because it's a stock. And as you heard me say millions of times, stocks are fragile, but certainly that UFO is very close by, isn't it? So we have an opportunity here to plan a trade to the short side with KR. So I'm going to look at the chat box and I'm going to start with that plan right now. Let me see. All good, all good, all good, everybody. Okay. Magic, very popular. Yeah. Let me see. All good, all good. Yeah, very nice, very nice. Nice to see you all, my friends. Nice to see you. Very good. Duyan is amazing. Okay, Duyan is magic as well. So anyway, let's go for it. Let's plan for a target. So turning on AutoUFOs. Wow, this is looking very powerful. Okay, and if you have been spending some time with me in the sessions, when you hear me say something so positive, I'm not gonna say sarcastic, okay, because I'm when trading, I am not sarcastic at all. But at the same time, when something looks too good to be true, normally it is too good to be true, okay? And in trading, that's the case. I mean, going from 31 all the way to 25 in one trade, could that happen? Yes. Is it likely? Not really. Probably it's going to take a while to get there. A while means the climate needs to propagate way beyond what statistics suggest. Statistics suggested 5 days, and to get to 25, unless something crazy happens, it should take more, right? So you may have to see a change of climate. You may find yourself trailing stop, managing the trade during the life of the trade, and exit somewhere in between the current price and 25, which is certainly something to be welcome. Having said all of that, that's what the UFO says. In the world of on-field orders, there is nothing relevant that the app picks up that would be concerning and would imply us taking profit sooner. And therefore, we're gonna give ourselves the opportunity to go to 25, because sometimes it does happen. Okay, it's not likely to happen. Okay, it's gonna be the trade of the year, the trade of the quarter, if that happens. But sometimes it does, and you're gonna be very happy to catch from time to time the trade of the year, the trade of the quarter, because it really, really, really helps your accounts to grow. When sometimes you catch a 10 to 1, a 5 to 1, it really, really helps your accounts, even though it's more likely to make a 1-to-1, 2-to-1 versus making a 3-to-1, okay? Versus making a 10-to-1, okay? So anyway, so I made a note, okay? Target is 2547. That's where the green UFO is. And therefore, it's now for me time to go into the option chain and load KR and see what we're gonna do here, okay? So I'll take another sip if that's okay, guys. Okay, so KR is loading here. I'm gonna have to calculate time to target. Of course, I also want to check on earning dates for KR. So earning date for KR is happening on June 18. So we have over a month and a half. Good. The trade may change climate in 5 days. So certainly a month and a half seems to be plenty of time in my mind. Time to target, let's calculate that too. So we have the entry would be this UFO, which is 3224. Okay, so 3224, that would be the entry price. Target price 2547, as seen before on the daily time frame. So that's 6.77 divided by the daily ATR that you can find in purple color in the bottom left, which is 96 cents. That is 7 weeks. So 7 times 7, that's 49 days. Okay, so 49 days is right here. And magic, I'll say this time, it's exactly where the earnings reports are going to be reported, okay? Which is on the 18th of June. This is the expiration date that lines up the best with that date, okay? So perfect, love it. So what are we going to do? Okay, well, I'm going to right click to analyze and buy a vertical spread, okay? And I'm going to go back to the option chain, right click. Notice I'm right clicking on the put side this time because this is a shorting opportunity. So I'm looking at the right side of the option chain, okay? And now I'm gonna analyze and buy a single spread, okay? So I got my puts here, puts there, okay? On the top is a vertical, on the bottom is a single. I'm gonna do the same thing I did before. I will uncheck the single. I don't need 3 slices, I only need 2. So my entry is, was it 3224? Am I correct? I kind of forgot. See, 3224, I did it right. And the target below 2547. Okay, so entry 32 point something, target 25 point something. That's the plan. Okay, so back to the charts. Okay, and let's put a few notes so you follow what I'm gonna do with the options. So let's bring a little bit of writing here. Okay, so we're gonna be buying a put. Okay, somewhere. I need to determine which one, okay, which put. The rules for me to buy the put is buy puts between entry and target, okay? That's the rule. So I'm gonna buy a put somewhere in here, and then I'm gonna be selling a put. I need to define which one, and the rule to define which one is sell puts beyond target, okay, which is 25.47. Okay, the entry was 32.24. Okay, so that is the plan. Okay, that is the plan. So now it seems logical to me to think of selling the 25 put because it's beyond the target, isn't it? And 32 to 25. So maybe we can give it a try and try, let's say, 31. See what happens with the 31. Okay. So let's go back to simulation and adjust all those parameters. So we're going to do 25 and 31. Okay. Notice again, my single option is unchecked. So with this unchecked, I'm going to be looking at what are the deltas at my entry. It's 29. Okay. It's almost what I want. Okay, it's almost what I want. I want 30, isn't it? So to make it what I want, probably I need to drop to the 26. Okay, and now actually I got less delta. Okay, so, sorry, not the 26, the 24. Sorry for that. Now I got 31. Okay, which that's good. It meets my rule. Okay, now when looking at gammas, okay, I got 5.91. That's positive. I got -2. Okay, so that's negative. Okay, meaning that there is a moment in time where the trade begins hurting you. Okay, so if you want to see it visually, okay, if I look at my gamma, okay, so the more the stock drops, okay, so this is my entry point. Okay, so the more the stock drops, going down, okay, from 32 to 31 and a half to 31 to 30 to 28, all the way to the target at 25. The more the stock drops, the better, the better, the better, because I got positive gamma, okay, and that means that the delta will be increasing negatively. Okay, so it's negative 30 at the beginning, and more negative 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 until it gets there. Okay, and then notice it flattens, and then the delta becomes less negative. So why is it that the delta becomes less negative? Because my gamma goes negative. It crosses the zero mark, and now, below 26 basically, okay, below 26, my gamma becomes negative and is hurting the PNL, is making that -2 figure, okay? -2 is this number, okay? And that's problematic. So how can I fix that? Well, I could move my 24 to 23 or 22, okay? That's -1. If I do 22, that's -0. If I do 21, that's going to be positive gamma all the time, positive at the entry, positive at the target. My delta is -34. It's a bit too much, so I'm going to drop it to 30. If I drop it to 30, it's too little. Okay, so again, the best way I can adjust it is to do 31.21. Okay, 31.21. That would be the way to adjust this trade the best I can. Okay, now I'm a bit concerned about one thing here when adjusting this trade, which is the fact that the 21 put is very far away from the current price. So I'm a bit concerned about the liquidity, and therefore I want to go and take a look. And yeah, so basically it's not going to be worth it, because if you look at the 21, basically that option would pay you 9 cents. Okay, 9 cents. So basically it's reducing the cost of the trade by 9 cents, which is $9, which is almost nothing. Okay, so you're going to suffer some slippage just to get $9. So it's not really making sense. And that's the difficulty of using stocks that are cheap. Okay, and a $30 stock is not expensive, and the lower the price of the stock, especially if you're using puts, then everything becomes cheap, and then it doesn't make sense to do spreads. You can just go ahead and do units by themselves, single option strategies. So let me take a look at single option strategies. Okay, right now, right here, I'm using the 32 put. Okay, if I use the 32 put, this is providing 45 delta. That's too much. So what if I drop it to 31? That's 36. What if I drop it to 30? That's basically the 29 delta, the 30 delta I'm looking for. Okay, and now of course, because there is no other type of unit against that one, is a single option. So you got positive gamma all the time, which is great. You also got more theta. Okay, but hey, you know what? The cost of this trade is gonna be $100. So what's the most you can lose is $100. No matter the theta, the most you can lose is $100. Okay, so as long as this market starts moving your way, we should be okay. Okay, so in other words, the way to go with this one, given the fact that the price of the stock is cheaper, it's a very simple trade, which is to buy the 30 put, and that's it. Okay, so I'm just gonna place an order. Okay, trade. Again, I'm gonna use market. Okay, to be honest, KR is quite liquid, as you can see. Okay, I'll make it a day order. Okay, and the activation rule here is not going to be less uh, than or equal to is going to be more than or equal to. So activation rule based on the price of the stock KR add. And notice that earlier I moved to less than or equal to. Well, now I'm going to leave it the way it is, which is greater than or equal to. And the entry price was 32.24. That is the condition for me to get in a trade. Okay. This is pretty close from the current price. Okay. If the market was to push hard before the close today, we may very easily get filled on this trade. Okay, so click OK, place order. Okay, we're gonna have a little summary here. So the trade would be to buy the 30 put that expires on 19th of June, only if the price of the stock rallies to 32.24. And from there, you're in a trade where the risk of the trade is around $100. So if you want to risk 100, buy one put. If you want to risk 200, buy two puts. If you want 500, buy five puts. Okay. And we're gonna execute this trade and run it with no stops because the most you can lose is 100 per contract. Okay, so we know that, and that's the way we're going to manage the risk. And then if it goes down, if it was to reach 25.47, we will close the trade for a fantastic profit. If we had a climate change or anything happened in between, depending on your trade management rules, then you will want to close the trade somewhere in between. Okay, so I'm going to click yes. So the order is being placed, okay, received. So if I look at the manage tab, I got now a buy to open order for KR waiting to get filled based on my activation rule. Okay, so we have it. Okay, so let me take a look at your questions. Okay, and we can we will conclude the session this way because we have 5 minutes. So really, I don't have time to plan many more trades. Okay, we did plan two trades today, one with Adobe and one with KR. One is long, one is short. Some of you may need both in your portfolio. Some of you may only need the long. Some of you may only need the short. So this is something for you to consider. And if you need a little bit of support on portfolio management, of course, in the sharpening sessions in the YouTube channel, there are sessions that talk about gamma hedge. There are sessions that talk about portfolio management. So take a look so you understand better what I'm talking about right now if you're new to the sessions. I'll take a sip if that's okay, guys. Sorry for that. I happen to be very thirsty today. Thanks for that. And again, looking at the questions to conclude the session for today. Denny, Jose, can I assume that UFO is created using supply and demand? Well, that is a very generic term. I mean, depending on who you talk to, and you mention supply and demand or demand and supply, you will get completely different answers because you talk to an economist, it's something, you talk to someone else, it's something else. And there are people that would call support and resistance supply and demand. There are people that would call news demand. There are people that would call Fibonacci retracement line support and resistance or supply and demand. So really, that would be subject for a very, very long conversation. Okay, I would recommend you to watch in the sharpening session the videos where I explain what is AutoUFOs. Because I go deeper into explaining the mechanics behind the scenes. But basically, what the app is looking for is traces that suggest on-field orders to buy that didn't get filled, waiting patiently to be filled at a specific price point or within a price range, and your on-field orders to sell that never got filled in the first shot, and they are waiting to get filled in the second shot, again within a price range in a certain place on the chart. Okay, this is what the app is looking for, traces that represent that, because of course, knowing for sure that you have on-field orders to buy or sell, that's impossible, in the sense that you will need to be the person placing the order to know the order is there. Okay, like for example, a great example of it is the orders we just placed. Okay, only us know we have buy orders for KR puts. Only knows that, because this order is not in the exchange. This order is right now waiting patiently in a TradeStation server with an activation rule. In other words, the world cannot see that order. Only TradeStation knows, because the order is waiting patiently in a TraceStation server, and the order will be sent in the market if a condition is met. So there are so many orders like that out there in the world, and you cannot know they exist. Okay, so the only way to approach it, which is what the app does, is to look for traces that suggests that may be the case, and therefore plot those price point areas where probabilities are supposed to be in our side, and then confirm with the UFO performance stats if that's the case or not. Okay, because there are cases where we've seen cases. Okay, and I don't remember any case like that by heart, but we've seen it, and I'm sure you have seen it with me in the sessions, where sometimes we get 30%, 40%. So what does that mean? That means that the unfilled orders available in the market, if they don't get filled, let's say during the day, they are canceled by whoever was the person who placed the orders, maybe a hedge fund manager, for example. So, in other words, there is little institutional interest, and then many orders get canceled, or there is more institutional interest, and then orders are still in place. Okay, some people may call institutional interest supply and demand. So again, we can get as creative as you want with that term, and nothing wrong with that, by the way. But again, I prefer to stick to UFOs, so that way we all speak the same language, because UFO is UFO. Okay, that's very clearly defined in our YouTube channel, where other names could be subject to other interpretations, and that's subjective. Okay, and this is a line I don't like to cross. Okay, so that's why I gave you this lengthy explanation, which hopefully makes sense. Danny, very good question. Anyway, everybody, yeah, it seems that all of you are good. Some of you are saying thank you, Jose, already, which is a way to say goodbye and see you next time. And certainly looking forward for that next time, which is going to be on the next Tuesday, if I'm not mistaken. Let's have a quick look to the calendar. So trade with you. Oh, not that one. So trade with UFOs / get together. So we're gonna get to see the calendar now. Calendar now. Yep. So calendar. This is April. Okay. So this was the last session this week. Okay. Long term, April 30. So moving into May. I believe it's going to be Tuesday and Thursday. Yeah. So the whole month is going to be Tuesdays for short term, Thursdays for long term, which is a normal pattern that we normally follow if possible. Sometimes we have to vary, but in this case, it's looking good for that. And also a couple of sharpening sessions on the 10 and the 24. And also, for the ones of you interested in Forex, we are running a Survival to Mastery Forex in Action class as well on the 25. By the way, there are early bird coupons up to 30% discount available until the end of this week because they are early bird, obviously. So if you are interested, send an email to rich@tradewithufos.com and we will let you know more about those coupons. I don't want to use the time in the session, and also we concluded the time. So I think the easiest way is that if you're interested, shoot an email to us and we will get back to you with the coupons, and you can be part of this class. It's a live online class. You get access to the instructor, but also the recordings. Okay, cool. Everybody, super pleasure as always. As I said, you guys take care, be safe, keep up the good work. I am really loving everything happening in the community and the emails you send and everything happening on your end. So keep up the good work. It's important, and see you soon. Bye bye, everybody. Take care.